Hi friends, welcome back to the channel, and this is your daily news. The market is freaking out today. I want to just jump in some headlines here. You can see here, regional banks plunge ahead of the Fed meeting. I believe that's going to be tomorrow. We're going to announce the interest rate, whether that's going to be a hike, pause, cut, etc. The rumor on the street before that it was definitely going to raise, but the question is now that we see the regional banks really facing some downward pressure. Are they still going to do that? So who knows? We'll find out tomorrow. First Republic rescue fails to arrest slide in U.S. regional bank shares. And this is a chart of sort of like how everything is doing in the market. Pretty much red across the board, except to a few stocks here and there. And this is a sort of, what do I want to say, the sector performance. So actually energy is taking the biggest hit, down 4%, and then financials is there as well. Now, individual stocks, though, are very scary. PAC, West Bancorp is one. I think there's Western Alliance, another one, like these regional banks. This one's down 80% on the year, but you can see there's just like this crazy drop off the last month or so, and it looks like to be no end in sight in terms of regional banks. And part of the problem is that if people think that the other person is going to be pulling money out, and you think that the next person is going to be pulling money out, right? It just loses confidence. And again, I've mentioned this guys before on the channel. A lot of our banking system is built on trust. Now, I get it, guys. There's people out there who say, Chris, you're so dumb. You should just buy Ponzi. I should buy Ponzi. You should buy Bitcoin. That's funny. I already called it a Ponzi. But the problem with this is that, crypto and these Bitcoin, all this stuff, it's based on the same thing. I mean, it's not that much different. It's based on trust. You trust that your Bitcoin or your Shiba Inu or your dog coin or whatever it is, you trust that it's worth something because you think the other person's going to buy, right? The whole system, anything you use, if you want to use a dollar or a euro or a yen or whatever, or whatever coin, it's all based on believing that the other person also thinks it's worth something. So this is where I get it, guys. There's somebody out there, well, you just got to buy gold. And I'm just like, because people always ask me that. And my opinion on that is the channels who pump you market crash every day and pump you to buy gold is essentially they work for the gold companies. So you'll never see me do that kind of stuff. And also too, it's not like you can just take gold to your local grocery store and buy food with it, right? It's not really practical. So until we get something else, we're going to be using dollars. So I'm fine saying, hey guys, I like my dollars. That's what we're going to be doing. However, people have a choice of where they can put their dollars. And yes, if you want to put your dollars into crypto, be my guest. I don't believe in that stuff. I think it's crazy risky. It's my opinion on that. And then unfortunately, it seems like people are losing faith in the regional banks. And, we had JP Morgan buy up First Republic, and I don't know. I don't have any prediction on, which bank is going to be good, which bank is not going to be good. The main reason is I lived through the, fiscal crisis of '08. And it was a scary time. It turned out that all the banks were connected essentially, and you just watch the dominoes fall. The one thing that we know for sure is that if you have a lot of exposure to commercial real estate, that's where you're going to feel more pressure than others, because essentially a lot of commercial real estate landlords are having a trouble, keeping their tenants. And also too, there may be tenants, I always use the same example of like Elon Musk with Twitter, that just don't pay the rent. And so, our whole system is based on people essentially borrow money to then, buy a building to, refurbish it, fix it up, etc., then rent it out. And it's all based on borrowing. You borrow money to make money, essentially is the concept. But when interest rates go up, it changes the cost of everything. And then also too, when you have the whole work from home movement, and just our big changes in the culture, and there's less money flowing around. I'm sure you guys know this stuff, but I just want to reiterate for those of you that don't know. Also too, this was a crazy, crazy story. Read the headline here. Chegg shares dropped more than 40% after the company says ChatGPT is killing its business. So it's like, what? So basically, the CEO, interviews like, yeah, we're a little bit worried about ChatGPT, and the stocks are like, right, 40% down. It's crazy in a day. And it actually, this is something that, say a year ago or 2 years ago, I should say, I didn't predict. Because Chegg was really, really popular among students. If you don't know, it's kind of like an online tutoring service. And then, you get matched up to an instructor, that kind of thing. And essentially, if I don't have to pay for, someone to do my homework, essentially is what it is. And I can just, use AI to do it like ChatGPT. Then why bother with these tutor things? So I'll be curious for you guys' thoughts on this one. It is a crazy time that we live in, and there's so much downside risk in some of these. You can see this right here. Took a big hit today, down 64% on the year. And for those of you who are big Chegg fans, I'd love to hear your thoughts on if you think Chegg will come back, or you think, ChatGPT really is a major threat to them, and their CEO should have kept their mouth shut. Regarding CEOs and keeping their mouth shut, I was actually going to do a video on this yesterday. Just there's so much news, and I wanted to do the WGA video. If you haven't watched that, please do. But SoFi, their CEO is the saddest CEO in the country, or in the world, you could say. The stock is selling off again, and the reason why is you got to see this interview he did with Yahoo. I'll play it for you here.
Joining us in studio to discuss is Anthony Noto, SoFi CEO. Thank you so much for joining us on Yahoo Finance today. So first, I want to get your big takeaways here. I mean, when we look at especially the personal loan origination volumes shooting up 46% in the quarter, how was SoFi able to insulate itself better than some other banks?
Yeah, this is our 8th consecutive record revenue quarter in a row. And that's a reflection of the diversity of our business, not being overly dependent on any one product or service.
And it was just the way he was talking and the way they had his lighting. He just looked so sad. And it was so ridiculous, the whole thing. And you can watch it, you're the ones over Yahoo. But, basically, he was actually trying to give good news at least. Like, hey, our revenue is growing, our customers growing. But he just looked so sad. And it seemed like it was completely scripted, which it was. But I'm just saying, don't be sad. And this is something that, you have to remember. If you're a CEO of a company, be it Chegg, be it SoFi, you're here to essentially, make everyone feel good about your company and tell people, hey, we got great numbers, and sort of calm everyone for the future, and, appear to be a safe investment. And so this is sort of why I mentioned the saddest CEO, and just think about it this way. It's like when you see sad CEO come up, you're like, oh my God, I totally want to give sad CEO my money. No. This is sort of where, to be fair to someone like an Elon Musk, who's very good at, marketing his products and essentially convincing all these people that, I'm going to have, robot drivers. And he keeps doing that every year, even though it never comes. But this is part of salesmanship. So the SoFi CEO needs to learn from Elon Musk. Yes, I am complimenting Elon Musk. He's great at marketing. I'm not saying it's worth it, but I'm saying that's part of the game of this. And, the other thing, too, that is coming, this is a real thing. We saw that job openings are going down. You can see the headlines. Job openings near 2-year low as layoffs jump. This is something that we've seen in several industries. I've talked to you guys about this before. The thing is that we also have an issue with people are just not participating anymore. There's a couple things. I think this comes from the JOLTS number. We read an article. It was a month or so ago. It was actually a direct quote from the government. They were saying that the numbers may not actually even be accurate because people are not reporting. And that's actually businesses, because basically what it is the government reaches out and gives a survey and say, how many people and how many openings you have, et cetera. And then the response rate is really quite low. I'd have to dig where that article was, but I'm just saying, I remember hearing about that. So we are seeing that job openings are low, but also I'm saying those numbers may not even be accurate, to be perfectly frank. And then regarding Elon Musk and what's going on over at Tesla is pretty funny. So Tesla actually raised prices today, evidently, on the Y and the Model 3. And then Ford lowered prices. The increase on the Tesla one is only by about $250, I guess, $250, so not a huge amount. And then I guess Ford is cutting prices like $3,000 and $4,000 on their Mach-E's. Now, the reason why this is so interesting is that I wonder if Tesla is and maybe car companies are going to go to dynamic pricing, where it's like playing the stock market at the car prices, and it goes up and down every week. I just feel like that would be really crazy to do in that kind of space, but who knows? Maybe that's the new model that we're going for. It's not impossible. You just push a button and let everyone know the price. I guess the issue would be that all the dealers around the country would have to go and change the sticker price all the time, and that would be a hassle for them. But theoretically in the future, we don't have any sticker prices, and we just do a sort of digital pricing the same way they do at grocery stores. A lot of them have essentially dynamic pricing where they can change daily. I'd be curious your guys' thoughts on that, if you think that would ever be a thing. Regarding changing daily, the USA may or may not be broke. I mentioned this briefly in the last video, but I'll just mention it again. So you're going to get part of this sort of discussion on, is there going to be a deal on the debt ceiling? So if I had to bet, I would say yes, they're going to make some sort of deal, and it'll be in the final hour. That's usually what they do, and they play out the drama. But in this world, who knows? And I'm just being real. I mean, who knows? I'll wait till we actually see if the two parties come together and say, okay, let's borrow money collectively. Let's raise that debt ceiling and keep the money flowing. Essentially, one of the things that I think is interesting is that inflation still remains high. This was something I thought was really interesting. The headline here: inflation in countries using euro currency inches higher to 7%. Right, and in the USA, we're the Fed keeps saying we're trying to hit like a 2%. I think we're hanging out like 4 and 5ish. So we're still above where we want to be in USA. And we'll see what the Fed does. Before all the rumors on the street were 25 basis point rate hike. And part of what's funny about this whole thing is that they keep they've been saying the whole time that we're going to raise interest rates and then keep it there for a while until the end of the year, etc. And when our savings accounts or money market accounts get to be a point where you can get 4, even 5, and I think there might be some crazy ones out there at 6%. Why mess with other assets when you can dump a bunch of money in that? And why mess with things that could go down when you're getting guaranteed returns? And that's sort of why people rush into bonds or CDs or this kind of stuff. So every time the Fed raises rates, it makes other things more attractive. For years, savings accounts weren't that attractive, but now that they are again, you can see rates have just been going up like crazy. And when you take a look at historically, you see this chart here. So the black line right here is sort of the rate at which the Fed is raising rates. So it's actually pretty steep compared to other points in history. When this is essentially the months, this is what this chart is, the months since the first increase. So this is what's going on, and we'll see what the talk is tomorrow. How this thing works. If you ever watch these things, is they announce what the rate's going to do. That hits sort of the street, and then Federal Chair Jerome Powell gives a speech, and then the market responds to that, and then you take some questions and answers from reporters, and you never know these things. And usually what happens as well is they release like a speech, and it'll often have much of the same exact language as the month prior, but they may change a few sentences here and there, and so that's always the drama. And then you have to wait for a couple days to see what the market thinks. Like you'll see live, what it does, but you don't know until you know. And kind of what's going on. As I said, with say the regional banks when we first started this thing, is that sometimes it takes a couple days for the market to really react. My personal opinion is I keep saying the same things, but for those of you in the channel, I'm just repeating it. You need to make sure that you are comfortable and sort of secure in your job. I think that's probably the most important thing right now, to be perfectly frank. With layoffs here and interest rates elevated, there's gonna be a lot of companies under pressure. And then a lot of the recent news, say with the Chegg situation, AI is coming for different companies and jobs. It's just real. And so companies, if they need an excuse to fire people or pause in hiring, like say IBM did, they have one now. And then the other thing is that we're also concerned about markets, because if companies come in, we'll say next quarter, that with people losing their jobs and lack of wanting to buy new iPhones, and they don't want to buy new cars, right? You never know what's gonna happen with that, because when someone loses their job, I don't think they're like going to be buying new purchases, and this is where then it starts to affect everything. And it takes a bit of time for this, right? So this is sort of why you're predicting things now. I don't think necessarily the world is going to fall apart and everyone's going to lose everything, but I do think people who are unprepared will. And the best advice, at this moment, I've shared with you guys many times, is if you have anything that's variable interest rate debt, you got to pay that off, because interest rates, I just don't see them going down. That's what the Fed's been saying. So the market is betting on, by 2024, they'll start cutting. But we'll see. I mean, this is as they always say, is we're data dependent. That's what they're going to say tomorrow. And watching the interest rates, and in relation to inflation. So anyway, that's what's going on. I'd love to hear your thoughts on any one of these things. And again, don't be like the SoFi CEO or the Chegg CEO. You got to watch what you say out there in this world. So do appreciate your time. Please share your thoughts, and I'll catch you in the next video.